Good morning, retail traders. This is a sneaky snake trading strategy where we talk about chart patterns, moving averages, and being in the now. I'm going to show you the play of the day, or not a play of the day, but just a play that we took last week, and it's through the sneaky snake trading strategy. We use chart patterns, and then I like to be using the candlesticks, and we're going to show you what we're looking at here on the trade that we did last week on the SPX. So we had a big snake right here, and I always talk about my strategy. It's called snake breakout pullback boom. It's a strategy of rejection, consolidation, and confirmation. So what we have here is the snake as we go into a downhill channel, and this strategy is built on the number 3, sometimes number 3. So we have the snake and it breaks out of the channel. So that catches our attention. Once that catches our attention, we start monitoring it and watching it and looking for some kind of chart pattern. In this case, we had a wedge, and I talk about the number 3 very often in this strategy. For example, we broke out of the box, out of the snake, and we pulled back and we started our first support. We started the consolidation, and we consolidate into a pattern. There could be different kind of flags. For example, it could be a head and shoulders. It could be a bull flag when you're going to the upside on a breakout. It could be an ascending triangle from the bottom down there. So you have like the snake coming out of here and it breaks out of it, and then it creates a flag. Just imagine you're knifing, and all of a sudden it breaks out of that flag, and it breaks out of that knife, out of that snake. It breaks out, and then it promotes a bull flag, and boom. It could do the same thing with an ascending triangle. Then you want to look for the reversals from the upside down to spot the snake. A head and shoulders, for example. Then you've got a bearish flag right here. If you want to realize what kind of trade you're in, you might be looking at, on a snake, you might be looking at what you think is a bull flag. It could be a bearish flag. Or a descending triangle. Now many of these descending triangles will bounce off the third bottom. So let's, for example, if we go 1, 2, 3, we could break out there. That would be bullish. But on that fourth time, you might be looking at a downtrend. So I want to really talk about that number 3 today. Same thing with the falling wedge. 1, 2, 3, boom. 1, 2, 3, boom. And then when you're going in an uptrend and you want to know if you're still bullish when you got into the snake and you're going into an uptrend, you got a symmetrical triangle on an uptrend. You got a double bottom out of a snake. Boom. So that's called a double bottom out of the snake. We had a controversy in the room about this a couple weeks ago. I had no clue what they were talking about, but that's a double bottom out of the snake. Then we've got another, like out of the snake, you got a rising wedge, which is bearish. So you want to know to take your profit. Same thing here. You've got a symmetrical flag. Now these symmetrical flags can go either way. So put a 50-50 mark on that if you're in a snake and it's on a downtrend. And you're going up on an uptrend out of a snake, you want to look for a double top. And confirmations, when you're looking at them charts, you want to be watching what's going on here. For example, we had a little triple bottom right here. It kind of went down and then it broke out of that and created that wedge. 1, 2, 3, boom. 1, 2, 3, drama. 1, 2, 3, 3 black crows, boom. So keep an eye on that number 3. It's a very critical number in my book when I'm trading stocks, even if I'm day trading or I'm swinging. I try to count to the third day and see if we're still in the trend or not. So what we got here is rejection from the top, which could be a triple top or a head and shoulders. It pulls back, jumps out of the snake into a wedge, and then it goes ahead and pops out of that wedge and creates another triple bottom comes back down, creates three black crows. So you had a triple top up here, 1, 2, and 3. Three black crows, and she breaks on up. So you got to try to find a resistance level to break, and that would be right here on the bottom of that flag. So that's a bear flag. See, it's going to the upside. So you know when you're trading this stock that on that third time and it doesn't break to the upside, you want to get out of that trade. Same thing as the top. You know, if it hits the triple top, it might be a good idea to get out of that trade and take profit. So we got the snake breakout, pull back, boom. And that's the way it works. This is on the SPX. It's a sneaky snake trading strategy where we talk about rejection, consolidation, and confirmation. Have a great day, retail traders. See you Monday. Please subscribe and ring that bell for future updates. And have a good day.